Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Tuesday, 9th of July Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We're going to go through a slightly different run through for a Tuesday because for me, it's a pseudo Monday because we didn't have a Monday webinar. So we're going to go for the bigger picture of the week today. Yes, we're day trading at trade day, but yes, it's important to take a look at the shape of the week because we can get an idea of where the volatility points, where the bigger ranges might be, where we might see markets behave differently, where we're likely to get maybe mean reversion trading, as in range trading, or where we might get trend trading. So I think it's a useful exercise. We usually do this on Monday. There was no webinar yesterday. I was otherwise engaged, so we're going to do that today. So let's start off of the recap for last week and going out into this week. So we had obviously it was a holiday shortened week. This is the macro matters. You can get this below you in the middle column of the three columns. Left hand column technical analysis, middle column the fundamental analysis, and the right hand column the news. So this is the more in-depth version. We'll concentrate on the weekly recap, slightly shortened version in here. So holiday shortened week last week. Obviously, last week was the July the 4th holiday. Markets did manage to hit record highs in here for the S&P 500 and the NASDAQ. Growth shares doing particularly well. And the June employment report also boosted market optimism. We got the PMI data last week. For the US, it was mostly negative. For the Europe, it was actually more positive. But at the moment, we do have a slight kind of sort of counterintuitive and slight slowdown is actually good for stocks. In that slight slowdown might preempt the Fed to cut quicker than expected. And that was shown in the jobs data. So the jobs data on Friday, slightly worsening. But then that's seen then yields go lower and gains in stocks. And that's what we talk about here. Look, June's deceleration, US jobs growth, saw treasury yields go to lower yields, gains in stocks. So all of that is going on in here. So slightly worse data than expected at the moment. Fundamentals, a slowdown is good for stocks at the moment, yet it's a slowdown in the economy. We're expecting a slowdown in the economy, and that slowdown is at the moment resulting in positives for stock indices because it's increasing the likelihood of the Fed cutting rates. The kind of minutes were a little mixed, I thought, in here. The market kind of reacted that they were relatively dovish. I didn't think so. I thought there's still internal disagreements. Fed are not going to move till September earliest. But now we've got definitely, if we're going to come to the Fed dot plot chart, definitely markets are pricing in the September cut, and now growing risk from the market side anyway that we get two cuts this year. We'll get another cut. The other event last week didn't really impact anything you guys are looking at, but we did get a new prime minister. In the UK here, as expected, with a very large parliamentary majority for the Labour Party. And the other thing that wasn't picked up in this, because we didn't have the result, this was published over the weekend, we didn't get the result till fairly late Sunday, was the French elections, where the left wing actually coalition got the majority, blocking out the right wing. The actual right wing, who the threat all came from the right wing, actually was beaten into third place by the centrist Macron centrist coalition, but the majority is so small and the vote so split that is actually causing some chaos in that. It looks like there's going to be no obvious parliament, and it's going to take some time before we get a new government formed. So some indecision there. Generally the markets like that kind of indecision. Let's take a look at what we had yesterday and today. So jumping to yesterday, first of all, it was actually going back. Sorry, let me go back to in here. So if we're going to look into what we got, so there was nothing of note anyway yesterday, so I don't really need to go to there. This week, the two standout points are Powell testifying to Congress today, and you see that there. We also had UK retail sales this morning. And then the other big piece of data is the US CPI. Now, remember, the US CPI data is an embargoed piece of data here at trade day. No trading 2 minutes before or after that piece of data. We will be sending out, if it's not gone already, sending out emails today, I think, or it's already gone maybe, but they're going out today. It's in the heads up, in the scrolling heads up above where you're watching this. It's also, if you go to Discord, you can get the alerts on the Discord. Okay, I think we've put and we posted it in the forums. Don't fall foul of that, guys. 2 minutes before, after. I know most of you guys who come on here know all about that, but if you don't, and you're watching on a recording, 2 minutes before or after, just some hellos. So we've got people saying hello. I like it when you say hello, so let's give you some hellos. Stephanie, Jim, Stefano, and 2 Rolands, but I guess it's the same Roland. So good morning to all of you. Good afternoon from my side. So yeah, so the big data points this week, or the big events, are going to be Powell today. We'll talk about that in a sec. We do get the RBNZ also this week. Not really going to probably impact anything that you guys are looking at unless you're trading currencies. We get Chinese CPI as well tomorrow, and then German CPI also on the same day as the US CPI, UK GDP, and then German retail sales. US PPI probably doesn't do much usually after the CPI data, and then the Michigan Consumer Sentiment Index at the end of the week. So that's what we've got coming up on the week. But all focus, and we'll talk about it in a minute, on Chairman Powell today testifying to Congress. And there he is. There he is. Powell testifies 10 o'clock today, and Yellen also speaking at the same time. Bowman speaking later today at 1:30. 10 o'clock Eastern, though, is the main focus when we get Powell testifies. Oh, and then Barr as well, speaking at 9:15. But all eyes on Powell really at 10 o'clock today. The other thing to remember in here, let me get rid of that one, is earnings kicking. Now, I didn't mention this, omitted this by accident, actually. Should have mentioned this, but going into this week, we get the earnings season kicks in. Really on Friday, we do get PepsiCo on Thursday, but the big real kickoff is on this Friday. JP Morgan, Wells Fargo, Citigroup, Bank of New York Mellon in here, all reporting. So always kicking off really in earnest with the financials. We get those starting on Friday. We'll start to look at this in the macro watch and in the weekly recap and outlook as of next weekend's posts. Okay, so but we'll definitely be focusing on these each day. We'll look at these on Friday as we go in. Most of these before the open on Friday, actually, all of these actually before we open on Friday. And then obviously going through the next couple of weeks, we'll be keeping an eye on the earnings calendar. Let's take a look at Bloomberg's 5 things to start your day. So another new record highs. We started off the week yesterday, and futures positive in here going into today as we await Powell. We're pushing. I think the yields are really important at the moment. Higher, longer end yields and a steeper curve. Even 2 years don't continue to exceed their 10-year counterparts. So I think it's important we do keep a yield. I've been talking about this yields and bond prices in here. We're coming up to some important levels on the bond prices. If we break those levels in here, we could see significantly higher prices, lower yields. For all the optimism of stocks, particularly those exposed to AI, Citigroup started to argue it's time to take profits. So Citigroup turning, I guess, negative on the potential price bubble in AI. Diversification question for investors: the concentration of equity gains in AI stocks should be easy to check their levels of diversification. So yeah, there is obviously a big weighting at the moment into tech and into AI. But for me, on a technical analysis basis, we've got a long way before we see the kind of over exuberance we've seen before with the likes of the dot-com bubble. Biden continuing to have issues in here, and his suitability to be president, ongoing president in here, and he is appearing at a summit that begins on Tuesday, and to see if how he performs at that, I guess. And then talking about in France, President Emmanuel Macron's power base has been undercut. So we'll keep an eye on the NATO summit, but don't expect too much that's going to impact us. And United Airlines, another its Boeing aircraft lost a main landing gear wheel, so not good for Boeing. That can tug, negative for Boeing, can tug the Dow down. If you trade the Dow, Boeing, the Dow is a price-weighted index. So, what was I going to say? Yeah, it's a price-weighted index, the Dow. So we have to keep an eye on that because Boeing is a high-priced stock. So the changes in Boeing can have a significant effect on the Dow. US stocks set to test another high before Powell. We're up there kind of anyway. Let's see what happens when we open, and let's see what we get from Powell's testament to Congress on Tuesday. What else we have? I switched to inflation versus elections, and Powell is up. And inflation is the CPI data that we have coming up on Thursday. Shares post patchy performance ahead of Powell's testimony, where it's not that patchy. Let's go to the CME Fed Watch tool in here. So now you'll see that for Thursday, 1st September, we're sort of nailing on the fact that we've kind of we're getting. So in here, look, now only 25% chance unchanged in September, 75% chance. And if we go to the December one, I think this is where it gets a little bit more interesting now, is the growing risk that we have 2 rate cuts now. So only this adds up to what, 23, 28, 29% chance that we only get 1 rate cut. So we've got now 71% chance that there's 2 rate cuts or more by the end of this year. So the market's starting to price all that in. Quick run through the overnights in here. So the Nikkei up significantly, 2%. Hang Seng unchanged. On the European exchanges, lower in here this morning. The CAC continued to get hit by the even though the market's kind of liking decision, no government is not good, obviously. So that's the CAC continuing to react for that from over the weekend. And if we go to the US exchanges in here this morning, further up this morning, 0.4 higher on the Nasdaq and 0.25% up on the E-mini in here. I spoke about the yields before, and if we go and take a look at the 10-year yield in here, I think this is going to be important to watch through Powell. Obviously you're watching the market, you're trading, but I would have some alerts in here as well. Why is this not loading? Oh, it's slowly loading. I'll jump to the price chart for now. But so here's my market chart. It's reports in here. I think it's important to take a look at 30-year and 10-year. So you can see the 30-year sitting on this important retracement level in here, and the 10-year in here getting close to. We're up through this impulse point in here. We just zoom in a little bit. So we got up through this 110.16. The high's at 111.01. If we can get above there, at the top of this channel, then it continues this bigger swinging uptrend that we've had in here all the way from April. So up through 111.01, we could see that trigger today through Powell. And if we get through 111.01, it brings into play this 111.13 level. And that can really, I don't think we're going to see 111.13 today, but through 111.01 will be a significant signal for higher prices and lower yields beneficial, particularly to tech stocks. And here we are on the yield chart. So those low yields are sitting down here. Look, if we look, let me pop this out to a bigger chart. So you got the low yield here. Let me just squeeze it up a little bit. And also these yield lows here where we held before. So this is the important level. We've got a small level here at 421, but then the really important level 419, really 419 to 418. If we can go to below that in yield, which is the equivalent of this going above, where are we? Wrong one, sorry, 111.01. Then in here, then that all looks quite bullish for bond prices, looks for yields to go lower, and that should be supportive of yet further new upside to in record high territory. So the target's all on the upside in here. On the stocks are all Fibonacci extension levels, as you can see above. So checking out those Fibonacci targets on the upside. I'm going to leave it there, guys. I'm going to wish you all a great trading day. Watching out for Powell. Remember, 10 o'clock today. Looking ahead to this week, Thursday CPI, Friday the earnings reports start to kick in. And then watching those bond price levels in here on the futures that we discussed there. And obviously then looking for targets on the stock futures. I'm bullish in here, as you can probably tell. So I don't see how you can't be. We're at record highs and we're pushing higher. It's not overbought. Look at the Nasdaq here on the 6-hour chart. We're not overbought on daily charts. We're not overbought on 6 hour, 4 hour. We're not overbought on any charts in here. So there's plenty of scope for us to go higher. And it's whether Powell starts to give a nod that the economy is slowing. The economy is definitely slowing. Some of the data more recently showing the economy is slowing. Inflation is still continuing to go into the right direction. We're obviously expecting these rate cuts. And if there's any clue of any kind of dovishness in his tone, I think stocks could really fly today. All right, guys, I'm going to wrap it up there. Again, wish you a great trading day. Helmets and goggles may be out there ready for the 10 o'clock for Powell. And I'll be back with you tomorrow on a Wednesday for another Bull versus Bear webinar.